Well, so one thing I realize about Bitcoin is it's a totally decentralized network, and people and companies and entities are joining it. So I got the metaphor for the swarm of cyber hornets when I listened to the whine of Bitcoin miners. When you hear them, they scream. If you've ever been in a Bitcoin mining facility, it makes you think about a swarm of hornets. But the truth of the matter is, some people thought, oh, it's the Bitcoin miners. Well, yeah, there's hundreds and hundreds, if not thousands, of Bitcoin miners. I mean, there's 1 million, 2 million Bitcoin mining rigs out there, right? So there's a million plus hornets in the Bitcoin mining world, and they're all converting, electrical energy into digital energy, and so that's part of it. But the other part of it is all the cyber hornets on Twitter. They thought it meant them, right? It's like all the people on Twitter talking about Bitcoin. And it sort of did, but it didn't exclusively mean them. It also means that this morning when I got up, I turned on the television and someone in China is saying something, and already 20,000 people had said something else about it. And then Anthony Scaramucci is on TV and he's talking about it on CNBC. And I thought Scaramucci is a hornet, right? And then I heard Andrew Sorkin saying, so Bitcoin is visibly decentralized, but I'm not sure about the other coins. And Scaramucci saying, well, that's what a Bitcoin maximalist would say. And I'm thinking, Andrew's promoting Bitcoin, Scaramucci's promoting Bitcoin. Yesterday, Jack Mallers was on CNBC talking about Bitcoin. Every journalist, every influencer, how many CEOs of Bitcoin are there? You're promoting Bitcoin. I'm promoting Bitcoin. Jack Dorsey's talking about Bitcoin. Thousands and thousands of CEOs. So every company on earth, every government on earth, every Bitcoin miner, every Bitcoin exchange, it's a swarm creature, and it's only growing stronger because people keep joining the network, and every single one of them that joins the network makes the network stronger. I mean, every paradigm shift, you've got people in the old guard that they just will never accept the new thing. Albert Einstein, who is, of course, one of the geniuses of our world, never accepted quantum uncertainty. God does not play dice with the universe. Sometimes people cannot be persuaded of these things. There are people that could not be persuaded. When the airplane was invented, there are a lot of people that had never flown in an airplane, and they were unwilling to fly in an airplane for the rest of their life. Some people didn't want to give up their horses. Some people don't, my father doesn't use a computer routinely. I think the first iPhone my father used was like the iPhone 11 or the iPhone 12. He skipped the first 10 generations. So people just sometimes don't embrace new technology.
Yeah.
When you and I if we're still in this business 30 years from now, someone's probably going to come up with a new technology that we have a hard time getting our hands around. I mean, the right way to think about us is we're like a fiat miner. We're a synthetic Bitcoin miner. We have a software business that generates large cash flows, and so we convert those cash flows into Bitcoin as we generate them. But we also issue debt, and we convert the debt into Bitcoin. And then sometimes we issue equity, and we convert the equity into Bitcoin. So we do all that because we think that Bitcoin is the best property in the world. And if we can raise capital cheaply and invest in something that we believe will be accretive to our shareholders, we do that. I could buy billions and billions of dollars worth of timberland or land or buildings. And I do that as an operating company. Bitcoin is property. So there's no limit to the amount of Bitcoin you can acquire. Now, if I were to acquire the Bitcoin in a fund, if I were to go buy GBTC or I were to buy a mutual fund, I wouldn't be buying property. I'd be buying a security. And so there is a distinction between owning property. Bitcoin is a commodity equals property versus owning a security. if more than 40% of your tangible assets are securities, I think you trip the SEC 40 Act, and then you're a financial company and you have a whole different set of regulatory requirements. So owning the property versus the security was one of the constraints or the nuances we had to consider. The other nuance, it doesn't give us problems, but it might give other companies problems, is the accounting for Bitcoin as property has traditionally been and is now indefinite intangible,
right,
which means that if you buy $1 billion of it and the price trades down by 50% over the weekend, and then it trades up by a factor of 10, you could have, in theory, $10 billion of Bitcoin, but you would be showing on your balance sheet $500 million of assets. And in theory, you could have a $9 billion investment gain, but you would be showing a $500 million operating loss.
right.
Okay, so this is odd and it's confusing.
Right.
We have to provide a set of pro formas on our P&Ls and our balance sheets to explain to people what that means. And of course, since our shareholders are generally long Bitcoin and we're substantially a Bitcoin company, right? A large part of our market cap is Bitcoin. That's not really a problem for us. But it would be a problem for a company like Nike. If you're Apple Computer or Nike or Facebook, and if you had a pristine P&L and a pristine balance sheet, then if you were to buy a bunch of Bitcoin and it traded down, you would actually have an operating loss in the quarter, which is indistinguishable from having
Right.
lost money selling tennis shoes or having lost money selling advertisement. So if you're a conservative CFO or a conservative board of directors, you would think you would be afraid of the volatility of Bitcoin. But to be clear, you're not afraid of the economic volatility. You're afraid of the accounting volatility. You know, if you look at my tweet, you know, what I said was you ought to buy $10 billion of this stuff and then buy another $10 billion. You'll make 100 billion, then you'll make $1 trillion, right?
Right.
The Michael Saylor approach would be go hard, right? And go for the billion, you know, go for the $1 trillion, because why not?
Right. Well, you're not a dollar cost averaging guy, I guess.
I'm not a dollar cost averaging guy. My view is you have a chance to turn $1 billion into 10 billion. And if I had $1 billion, I could turn it into 10 million, I would. But if you're a bit more conservative, you know, and you're going to take a 5% position or 2% position, then you wouldn't do that. I think, you know, ultimately, why wouldn't you buy the security? Because if you buy the security, you don't have title to the underlying property. So you cannot move it between 100,000 counterparties with no taxable event.
Mm-hmm.
And I think it's useful to be able to move $1 billion without paying tax on it, right?
Yep.
It's an obvious thing for security reasons. And also, you just don't want to pay the tax when you move it from counterparty to counterparty.
So let me ask you about that.
I don't think that's good. But, you know, the summary is people are moving into it, Bill. I mean, 35, 40 publicly traded companies will have Bitcoin on their balance sheet by the end of the year. And that's up from 0 a year and a half ago. So we're making progress. But we'll make much faster progress when the accounting gets fixed.